Hi, everyone.
Hi.
Did I say happy Friday? I don't think so.
I
It's
don't. It doesn't feel very happy. Although the good thing about it is the markets are closed tomorrow and Saturday or Sunday,
Hall-
right?
Hallelujah. Yeah, so we're coming to you again, third Friday in a row. We had another really volatile week in the markets, and we wanted to share our thoughts about what's going on with you.
Yep, for sure. So I wanted to just kind of start out with an overview. The markets are, I mean, the economy is still very, very strong. Um, here's a slide that shows gross domestic product going back like 20 years, and you can see the long-term trend is just up higher and higher and higher. There are troughs in there, so you can see like in 2005 the economy contracted a little bit. That was during the Great Recession, the housing crisis, and then there was one off to the right where that was the big steep one was during the COVID when COVID first came out. But you see how fast it bounces back. The economy is very resilient and it will bounce back. And similarly, uh, here the graph on the left I want you to look at. Forget about the one on the right. This shows corporate profits going back to 1988. And you can see the trend again is up, up, and away with some occasional dips. And the dips that you see there are those are when the stock markets don't do well. They don't like that, and they kind of get myopic, and all they can think about is what's happening today. But you see that the markets go higher. I mean, the profits go higher, and when profits go higher, ultimately they drag stocks up as well. And look at the blue bars there on the far right of the left-hand slide graph. Those are future earnings projections right now as of September, the consensus of what earnings are going to do in the next 3 years. How about that? They're going to go higher. And you see these markets acting like they're going to go lower and stay down, or we're going to go, the whole economy is going to go bankrupt. It's not going to happen, folks. That's not what's happening. So, good information there. And Angela, here's another one that we could share.
Yeah, this is a fun one. This has been a really rough year in the markets, and I have a lot of people coming to me like, "Oh, is it ever going to end? It's 9 months we've been dealing with this. Come on." And it feels like consumer confidence is at an all-time low right now.
Pretty
And I see
low.
that in everybody listening to this video right now. And so the blue dots on this chart below the dotted blue line represent consumer sentiment troughs when people thought it was the absolute worst. So, look at April of 2020. You see a blue dot there, right? The pandemic is just starting. We all think the world is going to end. And then, boom, what happens afterward? The stock market shoots up 43%. Another example, November of 2008. This is the financial crisis. The banks are getting bailed out. Like, I barely remember this now, but it was a big deal back then.
Yeah.
Everyone thought, we were all going down. Boom, the markets go up 22% over the next year. And interestingly, take a look at above the dotted blue line. Every time consumer sentiment was at a peak, the markets faltered afterwards. And so what this tells me is, one, we are at an all-time low in consumer sentiment. So if history is any indication of the future, we can, reasonably expect that things will start to get better really soon. And two, you cannot trust your own emotions when it comes to investing. So if you're thinking, the world is about to fall out from under you right now, it's probably not.
Yep. Yep. Your emotions are you should think of them as a contraindicator. Whatever you're feeling right now, that means you should do the opposite, because in investing, that's how it works. Here's another
Yes.
graph that we think is really, really interesting. And it kind of encapsulates why, our advice is to just be patient and not do anything. Here, on the left-hand side of this graph, you see the green bar, and that shows the S&P 500 going back to 20 years ago. So it's averaged about 9.5%. So if you had just been Rip Van Winkle and went into a sleep, a 20-year coma, you'd wake up and you would have made 9.5% per year. And think about all the chaos that's gone on in the last 20 years in the economy and in the markets, and yet that's the kind of returns you would get. The blue bar is the average 60-40 investor, which many of our clients are in that camp, and that average return has been 7.4% per year for 20 years. The dark blue one, or it looks like maybe might look like purple to you, that's a 40-60 investor. So 40% stock, 60% bonds, or the other one was 60% stock, 40% bonds. And that the 40-60 person had made 6.4% per year. Look over there at that poor little orange dot line there. at the very end, that's the return of the average investor over the last 20 years. Now, why would the average investor be doing so much worse than all the other indices that if he just bought them and went to sleep? What do you think, Angela? What's the reason?
What I don't have to think. I know it's because they're buying and selling at the wrong time. When the
Yep.
markets are at those lows, their sentiment, goes down and they sell out. I can't take
Yep.
any more of the losses.
Right.
And then they say, well, I'll wait for things to calm down before I get back in. What that means is you waited for the markets to come back up to the top and you got back in. And so over 20 years, you've secured yourself, a measly 3.6%
Right.
in your investments.
Yeah, they just keep rinsing and repeating and doing the same thing over and over again, and they just let their emotions rule them. The reality is that when markets are cheap like they are now, and by many, many measures, by almost all measures, they are remarkably cheap. Now, that doesn't say they couldn't be cheaper, in the future, but they are cheap right now, and they represent a really good value for people that are willing to hold their nose, tolerate the 500-point downturns it seem like they're coming every day. And just be patient. Just be patient and hold on. The returns are going to be there. They've always been there in the past. And judging by the past, we can say that they are going to return. So what do you think, Angela?
I think, again, yep, we got to hang in there. If you want to talk, please give us a call. One bright spot in the week is that we did see markets go up 2% in one day, which we haven't seen in the last couple of weeks. So, we were all a little buoyed by that this week. But we want you to know, we don't think the bottom is falling out, and to stay the course. Don't be the average investor. Be up on those other blue and green lines.
And we will say that, we haven't had, phones are not ringing off the hook with people wanting to get out of the markets. We don't, our clients have been through this many, many times, and they understand. We really appreciate that. That said, we both feel your psychic pain. I've been through this for 35 years. Angela's been doing it for 20 plus years. We are confident. I roll with this and think, this is, we just have to go through this. No big deal. Everything's going to get better. I know for a fact that that's going to happen. As far as from my own life. But we also know that most people are dealing with what they see in the press and in the news and what their friends are saying. And there's just a big sense of gloom and doom right now. And we feel your pain. It really hurts. That's the worst part about this job. I think Angela will agree is just knowing that you are hurting right now. And there's nothing really we can do to change it except for buoy you up and make you realize and remind you that things are going to be fine. Don't worry. We'll get through this.
Yeah. And, just like you, I'm avoiding logging in and looking at my 401k right now. I'm invested in the same portfolio you are. So I'm ignoring it. But I also have, I have this history, and I've lived in this world. So I know, what's going to happen next. And I'm okay. So feel free to give us a call if you need to. We highly encourage you to keep the news off. There's all kinds of crazy stuff in the news right now about what's going on in the markets. It's supposed to be a really beautiful weekend. We wish you all a great one. We hope you have some time to get outside and enjoy what's probably the last of our really beautiful weather.
Indian summer. That's right. Go grab it.
Yeah.
Okay. Well, thanks very much for watching. We hope you have a great weekend, and just please call us if you need us. We're here. Take care.
Bye.
Bye-bye.